And then Anna, your company really is a fintech solution, but it's specific to housing. So we'd love to hear about, you have two models, and we'd love to hear about, what you're developing, and then we can sort of get into some of the nuances with it.
Absolutely. So yes, we are a fintech company, and let me tell you how we were born. So the deep need to innovate comes out when you're on the phone to customers who are in tears, who are crying, and they've done everything right in their lives. So imagine a lady, and this is a real story. She just lost her husband. She lives in a beautiful house, and her home went up in price, but her property taxes went up too. So she has now taxes, insurance, some legal fees to pay, and she's trying to tap into her home wealth, and she's trying to get a mortgage, but she can't qualify for a mortgage due to insufficient retirement income. So she's now facing losing everything she knows, having to move out away from her friends to another neighborhood and possibly be a renter for the rest of her life. And these stories are real and they happen all the time. So the fin in fintech is new generation of financial products designed for older adults, helping them to deaccumulate. And the tech is because we are a platform that connects strong customer demands with capital markets at scale with the right type of operational support on both sides.
And what are your two products that you have? You have two different named products?
Yeah, we have two
different ways
products
to unlock the equity and get a stream of income. So maybe just tell us what each of the products are.
So possibly to be first helpful to share a little bit of research, because everything we've done, it came from customer conversations. So we've seen that there's so much incredible innovation for millennials and Gen Z, and there are so many products to tackle house affordability and home ownership, and yet there's not enough done for retirement era, for stage of deaccumulation to tackle the funding crisis of later life. So, and this is a really important market because people over 62 years old in the US own $11 trillion worth of home wealth. This is one of the largest asset classes there. And what's really puzzling is that people only have limited ways to access that wealth. So they either can take a mortgage, reverse mortgage, sell, or there are some home equity investments, but they don't work for many. So to understand what would work for people, we ended up speaking to customers over the entire year to understand their wants, needs, financial situations. We've gathered together industry leaders, so existing non-bank lenders, mortgage bankers, that gave us scale. And we found out that, for instance, out of 10 people trying to take, for instance, reverse mortgage, only one person walks away with a product. 9 is there without the right product market fit. So we developed with customers products for them. And the needs we found people have, why they're looking for help. So they're not proactive. They're not like, oh, my home went in price, so let me take advantage of that. I'm ahead of the game. It's very much reactive. So many people went through inevitable life events, financial shocks. And you mentioned some of them, like home repairs, right? Getting rid of popcorn ceiling, long-term care expenses. So it's very often actually daughters and sons looking for help for their parents so they can age in place. Or even, a guy who owns $4 million house, and he's like, you know what, Anna, my house went up in price, so my taxes are driving me out of my home. I don't have sufficient income to stay here. And we found that what people care about is A, they want to age in place, B, they really want to supplement their retirement income significantly, and C, they want to take care of their legacy if they have children. And by the way, you wouldn't have these conversations on a daily basis because people told me, like, I don't want to be a burden, I want to be able to take care of myself. So based on that, we developed 2 products. So first, to incentivize both customer and aligned their needs and preferences, but also capital markets. So we removed foreclosure risk. This is a non-debt product, equity purely. We offer much more money, much more funding, so people can live off that. And then we saw the biggest difference is the legacy planning. So we created legacy line for those who deeply care about who is going to inherit their home, and graceful line for those who are more life-oriented and need more funding now. Let me start with graceful line. So this is our first product. It's a forward sale of a home with a lifelong right to live in that home in return for a lump sum, around 30%, and a lifelong income, which is an annuity on the back end. And people have a secure stream of income a check in a bank account every month with a zero foreclosure risk, right?
So that's what I was going to say. They can't lose their home.
They can't, because it's a forward sale ultimately, right? As opposed to sale at death, which doesn't necessarily benefit person living in that home, right? The second one is a legacy line. So it's for those who deeply care about who is going to inherit their home. It's a play on a part own, part rent model. So imagine you own 100% of your home. You can fractionalize, sell portion of your home, like up to 49%. So the owner is majority owner. Let's say they sell 30%, they get a lump sum, but in return for that lump sum, they pay a pro rata rent on that portion sold. So it's super affordable to pay like 30% of a rent on the portion sold, and it's right-sized. And this investor can, like, this portion can be bought out by family anytime they want to keep the home. So people like literally tell me like, oh my God, it's cheaper than my auto loan, literally.
And those are the things that we're encouraging Milken to, people to think about in terms of, okay, what about your home? What about Social Security, which we didn't really get into? We talked yesterday about Social Security in our private session and how we